The markets are down, the charts show it, but is there any relief in sight? Is there any stability yet, or are we all just waiting for catalysts like the Fed and its rate decision?
Dom, the negativity out here in markets right now is something that I have not seen or felt in years at this point in time. Everything is what is going to go wrong. I'm hearing a very little about what is going to go right. And when you come back and you just sort of look at the charts and step back and unemotional look at it, you haven't seen a break below the June lows. And if we're going to get a big drop below the June lows, it's going to have to be a lot more hawkish and a lot more negativity, and something else new is going to have to come in, Dom, to really push these markets a lot lower from our perspective. And I would just note from that sentiment, if I go back and I look at the AAII data, it's the second longest negative streak in terms of the AAI data going all the way back to 1987. And when you look at very simple returns from here forward, the odds and probabilities suggest that the market can go higher. But again, most investors don't want to hear it and don't want to see it. And the charts, are, to me, look pretty ugly, but they're starting to start to go sideways at this point in time, down.
You know, I hate doing this because people have been proven so wrong over the years by saying these exact words. But isn't this time different, Craig? Right? Because this time is different because we are embarking on the recovery from pandemic and even financial crisis era financial policies, monetary policies that have been unprecedented in U.S. economic government history. Unprecedented means there is no historical comparison to it. So is this time different?
I'm not sure that this time is going to be per se different, Dom, because when I go back and I look at stocks have already been declining. If you look at the growth sector stocks, they've been declining since basically February of 2021. You've got a lot of stocks that are already anywhere between 50 and, well, frankly, 80% off of their prior highs. Again, a good friend of mine would always say, one doesn't get hurt falling out of basement windows. And when you look at where a lot of these stocks are already trading, what is it that we don't really know? I get it. It's unprecedented at this point in time for a lot of these pieces. But again, sentiment is super bad and stocks are really beat up at this point in time. And when I go through and I start looking at bond markets and I look at credit spreads and I look at a lot of other indicators, those look like tops. They don't look like they're starting to go higher. And so if we're not seeing a huge expansion in, say, high yield or investment grade or some of these other pieces, then I don't think we have a great financial crisis or something along those lines in front of us at this point in time. The things in the escalation in Europe is troubling, but again, the energy stocks are still a place to hide at this point in time.
You know, it's interesting, Craig. A former boss of mine in my Wall Street days used to say to me, there is only one end of the world, and this is not it. So if
Correct.
This is, in fact, not the end of the world and the markets are not headed towards Armageddon and that this country is not doomed to be fated towards a fiery pit of inflation, there have to be places out there that are looking attractive. I wonder what the charts say those places are.
Well, Dom, from our work and our relative strength work and our total return work and absolute trend work, I will tell you that energy still remains an overweight for us. And if we look at stocks in here, such as ConocoPhillips, it looks like to us this is a very constructive chart about ready to break out the new highs. I'd also just mention in consumer land, there's still consumer spending. Go around to the malls, go to Target right next door, and you'll clearly see that spending is happening. Look at stocks like Ulta Beauty. They've been consolidating for multiple months, and they're finally breaking topside in here and showing good relative strength. But then on the flip side, Dom, if we go back and we look at some of the household cleaners and some of the staples areas parts of the market, they're starting to sell off. So if the world is going to be super negative, end of world, I wouldn't expect the staples to be selling off and looking weaker. I would expect them to be stronger. And I'm seeing investors perhaps taking some profits in those parts of the market and starting to play a little bit more offense than defense, just at the margin, not at a measured pace too.